Well, hello, everyone, and thank you for joining us today. I'm Roy Harryman with Ministry Pacific, and in just a moment, I'll be joined by our expert guest, Max Herr. This webinar is a free resource of Ministry Pacific Insurance Services, and we provide complimentary webinars, ebooks, and consultations because we truly want you to succeed in your mission. We are not insurance agents, and we don't work for an insurance company. We are insurance brokers, and we're exclusively committed to serving houses of worship and nonprofit organizations. Ministry Pacific is here to serve, so please take us up on our offer of a free consultation at ministrypacific.com. I want to introduce our speaker. Ministry Pacific is grateful for the expertise and generosity of Max Herr, President of Church and Ministry Compliance Consulting. He has more than 25 years of experience in insurance, financial services, compliance, and governance. Max served more than 10 years as a church treasurer and 6 years as a church compliance specialist for the California Southern Baptist Convention. Max, welcome, and thank you for joining us from sunny and a little too warm California.
Good morning. Glad to be here.
So to dive into our topic, 2 words are sufficient to introduce today's subject: unintended consequences. And that's what we want to avoid when making facility-related decisions, whether a church is receiving income or simply opening its space to the community for free. When it comes to houses of worship and real estate, the main outside uses that come to my mind would be a daycare or a school. I've also heard you share about cell towers, cellular companies paying churches for leases. What are some other income generating concepts that houses of worship are receiving outside income from?
Currently here in California, churches with vacant land are being approached by companies that want to locate electric battery power storage units on their property. So it's kind of an analog to the cell phone towers, and they'll come in and site 2 or 3 or 4 battery storage units and generate revenue to the church for the use of the property. And it creates the same property tax exemption issue that the cell tower does.
Cell tower, battery storage units on vacant land, schools, daycares, and perhaps some other uses. But as I understand it, it really comes down to a couple of potential areas of concern when churches generate income from their property.
Correct.
One is a federal tax liability, and the second is a potential loss of local property tax exemptions. Now, I'm sure everybody on this Zoom call today wants to know what activities would trigger financial repercussions like that.
Well, let's start with the property tax exemption, because that's the one that's going to affect every church or every nonprofit that derives revenue from other sources outside its organization. When you lease ground space in some manner or office space to an outside entity, especially if that entity is a for-profit entity, it's going to have a direct effect on your property tax exemption, because your property as a church or another type of nonprofit organization under federal law is supposed to be irrevocably dedicated to exempt purposes. And when you're granted a property tax exemption, whether it's a church or a religious exemption or a welfare exemption for other uses, it's only because your property is being used for those exempt things. And when you disrupt that use by planting a cell phone tower or letting the local car dealership use a portion of your parking lot to store excess inventory for a short time, you're running afoul of your property tax exemption. And so there's typically a formula based on time of use and area as a percentage of the total property that is used to determine what percentage of property tax exemption is revoked. Once that revocation happens, it will stay in place until that use no longer exists. On the other side, the income tax question, the first question to ask is, do we have a mortgage on our property? Because the federal rule relates to what's known as debt finance property. If the property is under a mortgage or some other type of financial debt, the tax code looks at revenue derived from non-church or ministry sources as being used first to pay the debt rather than using your own funds to pay the debt. And when you're using other people's money in that context to pay your bills, then the federal government says that's unrelated business income, and we want a 21% share of that.
And the 21% share would be a share of the income generated from these activities.
What would be considered the net income, not the gross income, but the
Hmm.
net unrelated business income.
Okay. And that's if there is no debt financing, however, is it a moot point and there is no income
It
tax issue?
Yeah, from the federal perspective, if there's no debt on the property, then 100% of the rent that you receive from a lease or an occupancy of any type is just something the church or the ministry is allowed to do with its property.
Okay.
And it's not going to create an income tax implication. That's why I started with the property tax implication, because it's always going to have an effect on that if it's a non-religious or church use.
Apart from perhaps a strange situation, it would seem that the issue with local property taxes is the one of greatest significance and concern.
Correct. Correct.
So, as I understand it, a church can lease some of its property to an outside entity, whether it be a cellular company or a few classrooms to Great Beginnings Daycare. However, a formula will determine the percentage of the property that is used for that, and there'll be a tax bill then for that component.
In most cases, a church has 100% exemption from property tax for both its land and its improvements, the buildings. If, let's say, you're leasing some classroom space to that daycare, and the classroom space is 20% of the total classroom area, that's not going to be 20% of the total land area. So there's going to be a formula that divides up the amount of land that's no longer exempt, and then 20% of the improvements that are no longer exempt. However, if you're leasing to another nonprofit organization, then you can change that property tax exemption from a church or religious exemption to what's called a welfare exemption and still maintain the property tax exemption, because the property is still being used for exempt purposes. It's a little bit of an administrative issue. And in some cases, especially here in California, we've had to help churches by restating their articles of incorporation because they have the wrong language that prevents them from being granted a welfare exemption. And so we correct the language in their incorporation, articles of incorporation, and then we can get them their welfare exemption.
So, if I'm understanding you on that score, a nonprofit or a house of worship leasing to a nonprofit would not result in property taxes being assessed if the paperwork is submitted correctly.
Correctly. If you lease, some like a Seventh-day Adventist church that normally meets for worship on Saturday might be approached by another growing congregation that doesn't have any property and wants to use their sanctuary on Sunday. If the SDA church is in agreement with allowing the use of its facility for another church's worship, that doesn't represent any kind of a property tax implication. But if that property is under a mortgage, whatever they're charging the other church to use that property, that still becomes taxable income.
Just to clarify, a house of worship that's leasing to, say, it's a for-profit daycare, which there are many
Right.
of. Um,
Yeah, it could be a Montessori school or
right.
who knows.
How does that change the equation?
anytime you rent to a for-profit entity, you're not going to have the ability to exempt the use of that property from your property tax exemption because it's no longer being used 100% for exempt purposes.
I've heard you explain this several times, so it makes sense to me. But judging by the number of people who have joined us on this call today, is this something that's widely understood, and are people complying with it?
I don't know how widely it's understood. I think from an income perspective or an income tax perspective, there may be a small amount of non-compliance when it comes to unrelated business income. Certainly, the IRS is not out looking to audit churches for their unrelated business income. It doesn't happen very often, but it can become an issue if the church is sued by the state or the county for property tax issues. Then that whole ball of wax comes to the forefront of the IRS, and it can raise subsidiary issues. It's the property tax issues that I think churches have the most challenges with when it comes to the use of their property because they don't understand the difference between leasing to a for-profit entity versus a nonprofit entity.
If a church uses a CPA or accounting firm, that that firm, they should be managing this kind of documentation and for the church,
I
right?
Yeah, ideally that would be true, provided that the CPA or the tax advisor is familiar with nonprofit accounting. There are lots of CPAs that are great accountants, but they have absolutely no understanding of nonprofit accounting and don't understand necessarily the property tax issues. So you need to make sure that you're dealing with somebody that understands church and religious use of property.
We were speaking before we started recording here. You were describing to me sometimes a tax bill can be triggered not because a church has used its property to create income, but because they didn't return a form. Is that correct?
Yeah, here in California, I can't speak too much about other states, but here in California, every year the 58 county assessors send out a notice to all nonprofit property owners, could be a church, could be a Goodwill store, whatever, that asks, is your property still being used for exempt purposes? In about a third of the counties, you're required to return that form. In the other two-thirds, roughly, of the counties, it's a negative declaration. We understand that your property is exempt unless you tell us, no, we have changed some or all of the use of the property to non-exempt purposes. In those counties where you're required to return the form, failure to return the form can administratively cause you to lose your property tax exemption in whole. And then you get this supplementary tax bill midway through the year that says, oh, by the way, now you owe us X number of thousands of dollars in property tax. And it becomes an administrative nightmare.
So pay attention to those forms and
Correct.
use certified mail to return them, and make sure that dotted your I's and crossed your T's to avoid.
Yeah. And in talking about property taxes in particular, once you get a property tax bill that claims you owe money, you need to pay that bill because failure to pay the bill will result in late payment penalties, and failure to pay the bill can prevent you from having a legal basis on which to sue for damages. So, in most property tax matters, you need to pay the tax and then you seek a refund. And if they don't issue the refund, then you can take it to litigation. But if you've never paid the tax and you try to take it to litigation, those cases tend to get thrown out of court because you haven't suffered any economic loss. You can't claim that they're trying to take money from you until they've actually taken the money from you. So it's a reverse nightmare.
Yes, because these bills are they're not pocket change. If you're suddenly receiving a commercial assessment on a even a modest church building, yes, it could be shocking. What are a few examples of churches that have fallen into conflict with the state over this and received what at least they believed to be was erroneously a property tax bill?
One church that I worked with several years ago, it actually was a startup church that merged with an existing church that owned property. And when we met with the two sides to discuss the merger, the easiest solution would have been for the new startup church to merge into the existing church. And then if they wanted to use the name of the startup church, to rename the existing church. They chose to do it the other way. They merged the church that had existed, that owned the property, went out of business. They transferred the property to the new church, and they did all that correctly. The only thing that they forgot to do was refile for property tax exemption, because when the property changes hands under California law, it can be reassessed. You need an exemption, you have to apply for an exemption. So the next thing the church knows, it's getting a tax bill for $20,000 or $25,000 in property tax that it wasn't expecting. It was the same thing. Can we just appeal this? Yes, you can appeal it, but not until you pay the property tax bill. Well, where are we going to come up with that money? I can't help you pull money out of thin air.
Right.
Had they gone about it the other way, merged into the existing church, changed the name of the old church into the name of the new church, when you retitle, if you choose to retitle the property, somebody's going to ask, was this a transfer? And it's no, we're just retitling it because we changed our incorporated name. So you may still have to file an exemption paperwork, but somebody's going to bring that to your attention. It's not the title company that is responsible for filing property tax exemptions. In another situation, I had a church here in Northern California that on their property tax bill, the name of the church was in English on the first line and in Spanish on the second line. And somewhere down the road, without any input from the church, they took the English name off of the property tax bill. And then the church got a property tax bill because the computer looks at that and says, oh, the property has changed title in some way. And so it's no longer exempt. And it was the same thing. We had to go through a bunch of administrative rigmarole in that particular case because it was during all the COVID chaos. The county granted them a waiver initially from paying the property tax bill until they could come out and redetermine if the property was still being used as a church. The other issue was that the person they sent out to do that claimed that only a portion of the property was being used by the church. The rest of it was vacant land, which wasn't exactly correct. It was playground and sports fields and stuff connected to the church. And so we had to argue that portion of the property tax exemption that they wouldn't restore. They had to pay that bill. We had to appeal that and eventually got it redetermined that yes, it's all exempt and they're refunded the money.
Forms matter, details matter, what we put in that blank matters, and it's definitely worth making sure that all of our documentation is filed correctly. Now, you had shared with me in a previous conversation, I believe I could have gotten the details wrong, a Florida church let someone put a food truck in their lot like one night a week or something, and
Yeah, it
chaos
was, well,
happened.
it wasn't just one food truck. It was a whole parking lot full of food trucks.
Okay.
But in addition to that, their structure was multi-story, and they had leased a portion of the structure to a religious college. The county assessor came in and said, well, you're not using the property much as a church. You're using it mostly to generate this revenue. And they initially got a tax bill of almost $9 million. This property was like beachfront property in, I think it was Miami, Florida. Well, they eventually worked out an arrangement where the college or seminary bought the property, was able to claim the entire property tax exemption. They fought over the prior bill, and they ended up paying $800,000 or $900,000 for the food truck use of the parking lot space. But then the church was allowed to remain in the building and continue to worship. But they ended up selling, they got, I don't know, 50 or $60 million in the transaction of literally selling the building. So it was a big windfall for the church that arose out of a horrendous property tax nightmare.
Yes, yeah, it wasn't their goal to move, and fortunately that worked out okay. So, is there a way to, and we're talking about lay people here, if someone proposes using your property for pay, is there a way to count the cost? Like, okay, if we do this, they're going to give us this much in rent, but we're going to lose this much off of our property tax exemption, and so therefore we'll come out in the red or in the black. How can you really determine that?
Let's set the income tax issue aside. We'll assume that the property is owned free and clear. The issue is going to be property tax. And the easiest way to figure that out is to literally go to the assessor's office and have a face-to-face with somebody with a map of the property. The assessor is going to have a map of the property and say, look, we want to give up 100 of our 400 parking spaces to the local auto dealership. What effect is that going to have on our property tax? And then it's going to say, okay, well, that's 25% of your parking lot, which is 20% of your total land area. So that creates a certain percentage formula, and it's going to be given up 100% of the time. So you're going to lose that 100% of that percentage of the property use times whatever that value is. And that's what the property tax is going to be.
So yeah,
And so they can figure that out over the counter pretty closely.
mm-hmm. So get it in writing so that you don't have any guesswork and the county letterhead. Yes, this is what you told us. And so then if you receive some shock bill, you have at least that
Right. You
pointed.
know, if you were told over the counter, well, it looks like it's going to be about $1,500 a year. And somehow when the property tax bill is prepared, it ends up being $5,000. Now you can pay the $5,000 and go in and try and figure out administratively who made the mistake, or is there a mistake?
A number of questions have come in. We let people use X, Y, and Z, but we don't charge them for that. Is that going to be an issue?
If the church is debt financed, the federal rule says you're not supposed to let the property be used at less than market rates of rent, because then what you're doing is you're creating what's in some senses an inurement. You're giving a private benefit out of church assets. So you should be collecting some market rate of rent, but that's kind of a gentleman's agreement thing. I mean, you
Okay.
can lease the use of your worship center for $1 a year,
Hmm.
and it's not going to create a problem typically, but because you're leasing it to another church. But if you're leasing to a for-profit daycare for $1 a year, that's going to definitely create an issue.
Max, while we're here, what's your policy about having people contact you for a consultation? Because I'm sure there's people just chomping at the bit to ask more questions and we'll be able to answer today.
Sure. And so this is the part that stuns people. I don't charge anybody for the services that I provide. I do have a 2 or 3 workshops that I offer to churches on like board training, financial guidance to members. It's called restoring a right relationship with your money. And I just charge a nominal amount to cover time and expenses on those. But consultative work, I don't charge anybody for the services that I provide. If I pay fees to the IRS or the state government, I send an invoice for reimbursement. If an organization finds value in the services that I provide and wants to contribute to my ministry, then I gladly accept whatever they offer. And they can contact me by phone or text message or email 24/7.
And Max has been a great resource. He's not only willing to help, it is excited to help people. He believes in the ministry of the church and doesn't want people to get ministry sidelined by administrative details. So we'll switch topics here momentarily and come back to any questions we haven't resolved. Insurance is also a big issue when it comes to houses of worship opening their buildings to the public. What do churches need to know about their insurance?
Anytime you're creating a long-term usage situation with another organization or another entity of some kind, you want them to have their own insurance to protect your property and to protect your interest in your property. Someone could trip and fall in your worship center that's not connected to your church. They wouldn't have been there if it weren't for their association with this other tenant. So the first claim should go to that other tenant's insurance company. If the reason they tripped and fell was a hole in your carpet, then that's going to be an issue that the insurance companies work out between them. Nobody should be suing your church directly because of their trip and fall accident. Having that other church insured with its own general liability policy, they don't need a property policy unless they own sound systems or things that they're bringing on. They don't have any insurable interest in your sound system or your lighting system. But if they burn down your church, your insurance company is going to want them to pay for it. And if they don't have insurance, it's going to be a claim against them. Your insurance company is going to pay for the claim and try and get the money back from the other party. As we all know about insurance, anytime you have a claim against your policy, your premiums are going to be affected in the future.
So the key thing here is that everyone who has a property insurance policy, that's going to dictate what's required when you open your building to other users in terms of insurance.
Correct. As long as if they're using it on a long-term basis, you want them to have their own insurance. If it's a single day event, then your own insurance company may be willing to give them a one-day event coverage for $200 or $300 for $1 million of liability. But you don't want to create a situation where you are deliberately putting your insurance company in the first position to deal with a claim when that claim should be somebody else's responsibility.
That's right.
Your insurance company is not going to love you for that.
Right. So always better to ask and make sure that it's a covered use or use that requires coverage, and make sure that those needs are taken care of before committing to leasing or sharing your facility.
Correct. And the other thing that I always tell folks is when you get a certificate of insurance from somebody, you want to call that insurance company and make sure that it's valid, because there are insurance brokers out there who are less than 100% scrupulous, and they'll issue fraudulent paperwork to make it look like somebody's got insurance. And I mean, they might even be charging money to this other company,
Sure.
other church, and not placing the business. So you want to make sure that the policy is in effect.
That's good. So not only are there diploma mills, there are insurance certificate mills and every other kind of fraudulent activity. So yes, verify that the coverage is that the certificate is legitimate. Now, in general, when outside groups are using facility, what are some best practices in terms of like having an agreement or a facility use agreement that is submitted to everyone who comes in from the outside?
Okay, so that starts at the local church's board of directors level. They need to create a facility use policy or series of facility use policies that govern what portions of the church are available to outside uses and what the responsibilities are of those outside users to the church. You know, if your church has, as most do, a no smoking and no alcohol provision that the members honor, you need to make sure that that's part of your facility use agreement. Because if you let someone use your church for a wedding and a reception, and you discover that they're serving champagne and alcoholic beverages that you didn't know, and that could create a liability situation.
Right.
Somebody gets intoxicated and becomes a real nightmare, especially if you didn't ask them to provide one-day event coverage for that. And your insurance company could be a real thorn in your side at that point by saying, we have a no alcohol provision in your policy that you might not be aware of. And now there's a claim that's related to alcohol intoxication, and we're not going to pay that claim. So now you get sued, and you turn around and sue your insurance company, and it's just a big nightmare.
It's a place no one wants to go. So, but the facility use agreement, essentially, it's a contract. If you're going to use our facility, this is what we require. This,
Exactly. And that's where you detail all the fees, cleaning deposits, and any damages that are done, and part of that facility use policy, especially to like a preschool or a school or a daycare, is any damage, physical damage done to the property is not your, it's not your privilege to try and repair it. Your responsibility is to notify us that a window was broken or a door was broken or there's a new hole in one of the walls. We will take care of repairing it to our satisfaction, and you'll pay for those repairs.
and Ministry Pacific does have model facility use policies available if you'd like to receive one of those. Max, let's cover another use category, which is related but also somewhat different, and that is every church, every organization is going to have their own idea of what constitutes a legitimate use of their facility. So apart from the use agreement, if we want to avoid a situation where a group that we feel is inappropriate for the use of our facility is demanding its use and pointing to other uses that seem similar, what do we need to do? This could be a left-wing group, a right-wing group. For example, if you're a conservative Christian congregation and a Wiccan group wants to use your auditorium, how do you avoid coming across as discriminatory?
There are a couple of definite things that churches need to be aware of, and the term is place of public accommodation. You don't want to turn your facility into a place of public accommodation, but that doesn't mean you can't allow the public to use your property in some way. Part of that starts with your own bylaws in defining how your church operates. We understand the church is a church, but the church is also a business. It's a corporation, and it has this schizophrenic or dual personality. And we have to separate the business side from the religious side. So in your bylaws, you want to discuss worship meetings and you want to discuss business meetings. And you want to very clearly identify what your church defines as worship. Because if you have an auditorium that can be used for non-worship purposes, and you want to derive some income from the non-worship use of your facility by defining what worship is, and if you haven't defined it as worship, then it's not worship. Now you can say our facility use policy is based on our bylaws that define the following activities as worship. We do not allow our auditorium to be used for worship purposes other than those defined in our bylaws. You can have a marriage policy that says, and a facility use policy that says only members of the church and their immediate family members may use the worship center for a wedding. We might grant other uses of reception hall or the fellowship hall for reception, but we won't allow the use of the worship center for the wedding, the marriage ceremony. And we won't allow a marriage ceremony anywhere on our campus. if it falls outside of our marriage policy.
So it comes back to the facility use policy. Sounds like it's really the critical piece in helping you to make sense of how to use your facility, who to say yes to, who to say no to without discriminating.
Correct. And if your general facility use policy is we don't allow non-church members to use our facility other than for these specific purposes. We will allow AA or Al-Anon or Narcotics Anonymous, to meet once a week in one of our classrooms or our fellowship hall. That's legitimate, and that's a perfectly legitimate use of the church property within its exempt purposes. But if some organization wants to hold a bingo game in your fellowship hall and you don't allow bingo as a normal part of your practice, that's not going to fall within that facility use policy.
Is part of your ministry reviewing a facility use policy?
Sure. I review bylaws. I help churches write or rewrite bylaws, help them work through facility and other policies. Absolutely.
One of the initial questions from Edward asks about building affordable workforce housing under SB4 in California.
California and most other states allow a property tax exemption for low income housing on church premises. I'm actually working with a church in Northern California to try and redevelop an unused portion of their property into housing for seniors, and then eventually converting the rest of the property to additional senior housing when the church can move on to another premises. So yes, there are legitimate ways to provide those kinds of benefits to the community and still maintain property tax exemption. But it's going to fall under that welfare exemption. It's not going to fall under the church or religious exemption from property tax. And so there's additional paperwork that's going to be involved. And in some cases, it may be advisable to set up a separate nonprofit corporation to manage that housing development. And then you negotiate between the two corporations, the church corporation and the other nonprofit corporation, which can be church control.
That's good to know that the tax law supports innovative uses of property like that help people. Vicky said we allow NNA and AA groups to use our church on a free will offering basis.
Yep.
We have a suggested donation that may or may not be met. Do we need a welfare exemption?
No, that's going to fall within the exempt purposes of the church in its ministry to the community. The fact that it's a third party that the church is allowing the use of the facility is never going to create an issue for the church.
A lot of the questions focus on the use. Other than whether it's a nonprofit or for-profit use, does the tenant really matter in terms of tax liability?
Well, yeah, the profit versus nonprofit use of the church premises does have a direct implication, because the nonprofit third party that wants to use or lease the church premises will probably qualify for the welfare exemption. The for-profit entity is never going to qualify for the welfare exemption.
There's a difference between a for-profit tenant, a nonprofit tenant, because of the use of the welfare exemption. But beyond that, does it matter, for example, if the for-profit tenant is a daycare or an accountant who wants to use half of a classroom?
Lots of churches have office space that's vacant and they lease it out. It's never an issue who you're renting to. You just want to make sure that it falls within the rest of your facility use guidelines.
There's a few questions of dialogue here. I don't fully know the context. Can rental payments be considered donations?
It doesn't matter what moniker you attach to the source, whether it's a donation or a gift or lots of different ways to title it. If your premises is debt financed and it's coming from an outside entity relative to the use of your property, it's going to be a taxable issue. And to the extent that the net revenue exceeds $1,000 in a year, it's going to be subject to that 21% corporate income tax rate.
Someone paying rent also would never be eligible for a tax deductible receipt, right? Because they're getting a value from what they're
Not
doing.
not legitimately, no.
Well, we've covered a lot of ground here, Max. Is there anything that you'd like to bring clarity to?
Yeah, I'm just making sure your bylaws are up to date. They've been modernized, and lots of churches are operating with bylaws that are 20, 30, 40 years old or older. If you rewrote your bylaws or revised them 5 or 7 years ago, they need to be looked at again. They should be reviewed every 2 to 3 years at the latest. And lots of churches fail to put together policy and procedures manuals that govern not just the use of the facility, but all kinds of things. If the church owns automobiles, what is the policy for the use of automobiles? And if the church has credit cards that they issue to 2 or 3 of the employees, what can you spend on that? What can you purchase with that credit card? And if you make personal purchases with that, how are we going to deal with that? Compensation of the pastor and reimbursing pastor for expenses and things. Those are all issues that need to be governed under policies and procedures.
It's real ministry that helps lead to good decisions, especially when the decisions might prove difficult or emotionally taxing. Max, we have covered a good amount of ground, but this is confusing. So a couple of requests to further clarify the use of a building by, say, a homeschool co-op, an AA group, whether they're paying or not paying.
Here in California, homeschool co-ops have become a fairly big thing in the last 5 or 6 years. And that, again, is a perfectly legitimate function of the church under its religious umbrella to make its facility available once a week for the co-op to gather, which is typically how they operate. Those are considered incidental uses of the premises, and whether there's any money that changes hands or not, incidental uses are never going to be a concern. They're not a concern from property tax exemption. They're not a concern from income tax issues. Even if the property is debt financed, those incidental uses are not looked at under the tax code.
But if it's a weekly meeting.
Yeah, and even a weekly meeting, it would be different if the AA organization had an office in your church and was meeting 5 days a week, 9 to 5, and having a series of meetings. That's a different circumstance. But if it's just the irregular use or even regular use, once a week, once a month, whatever, those are considered incidental uses, but they're underneath the umbrella of the church's exempt purpose.
One last question before we sign off here. If a church, for its use of facilities for weddings, if they charge a fee, how are those fees accounted for? Are those anything that could affect your property tax exemption, or it sounds like they could affect?
No, the weddings are never going to have an effect on property tax exemptions because, especially when you define weddings as a worship service. But again, any money that's derived with debt finance property is something that has to be accounted for. If you have one wedding in a year, it's probably not going to cross that $1,000 of net revenue threshold. But if you're doing weddings 52 weeks out of the year, you could be generating significant income that may be taxable. But you're gonna deduct expenses from the gross, wear and tear on the carpet and carpet cleaning and electricity and employee expenses and whatnot. They're all going to be deducted from the gross. So again, you're only going to pay on the net revenue and only when it exceeds $1,000 in a year.
Extremely helpful. Well, a lot of specific and detailed questions that we're not going to have time to get to today, but the good news is please contact Max regarding tax policy and facility use policy questions. And then Ministry Pacific is happy to talk to you about your own coverage for leasing your building and what's required for tenants, as well as to provide a model facility use agreement that you can adapt. And you can get that by emailing service@ministrypacific.com. Thank you for joining us. Appreciate you investing in the longevity of your ministry and taking time away from busy things. And we encourage you to make this the beginning of the discussion of some of these complicated issues instead of the end of it. And as always, we appreciate Max, his magnanimous spirit, sharing his insight and advice. So please contact us and let us know how we can assist your mission. And that's all we have for today. Thank you so much, Max, and everyone who's joined us.